Today on the CEO Barbecue, we're looking for gold and copper in Latin America together with Rio2 Limited. For a bullet point summary of this and all other CEO interviews, please go to resourcetalks.com and subscribe to our free weekly newsletter. The company you're about to hear from has paid us for the production of this interview, but this interview is still intended only for experienced speculators because this is venture capital and mining is a very risky industry where failure is the norm. All conversations are general and impersonal in nature, and they contain forward-looking statements. I'm not a licensed financial advisor, and my business sells content-producing services, which also makes me biased. So before continuing on, please talk to an independent investment advisor with a good long-term track record because your capital is at risk, and also visit setterplus.ca where you'll find the company's official filings. If you're not 100% sure you understand all the biases and the disclaimers that I just showed you, please go to the last section of this video and do not consume this content unless you fully understand and agree with everything said herein. That all said, I'm actually going to start off by changing the name of the show from the CEO Barbecue to the Chairman Barbecue for this episode alone, because that's who's on the grill today. Now, this is not Rio's first time on the barbecue, though, so I won't be doing the deepest of dives in here. This will be more of an update, but just briefly, Rio2 is just about to transition from a developer to a producer, and they're likely mostly known for their Fenix gold project in Chile's Maricunga belt. Fenix is a long-life open-pit heap leach gold project, which Rio itself has worked through permitting, financing, and construction to soon production. And that build-out is now reported to be about 80% complete. And thus far on track for first gold production in January of 2026, with full ramp-up to roughly 100,000 ounces of gold per year expected not long after operations have started. And actually within the same fiscal year. Now, that's not all that Rio thinks Fenix has to offer. So they've proposed a phase 2 expansion concept here, which targets a PFS in 2026 and an FS in H2 of 2027, with permitting water and capital works expected to go beyond that, so up to 2030. How that's going, are those timelines still realistic, and who's paying for all that is something we'll be talking about later on. Now, until very recently, that was the whole story, and this would have been kind of a nice, almost Christmas catch-up here with Alex. But in early December, Rio2 announced a major kind of strategic shift, if you will, with a definitive agreement to acquire Southern Peak's 99.1% interest in the Condestable mine in Peru. Interestingly, this is not a gold mine. It's actually a copper mine. It's an underground copper mine with an 8,400 TPD plant attached to it. The proposed transaction implies an enterprise value of about $241 million US dollars, with $180 million of upfront payment split across $80 million in cash, $65 million in vendor debt, and roughly $35 million in new Rio2 shares, plus a $37 million deferred that's going to be coming out between 2027 and 2030. And there's the assumption of $24 million US dollars of debt as well. To fund the cash portion of this deal, Rio has chosen to go for a bought deal financing, which we'll of course talk about later on as well. Is this worth the dilution? How the price was determined? Why go into copper? Why do it now? And a bunch of other questions are on my list for later on today. Rio is listed as, well, Rio, so RIO on the TSX main board in Canada. The stock's 52-week high is $2.70 and its 52-week low is 58 cents. With a market cap of just over $1 billion Canadian dollars and just under 430 million shares outstanding, today this is a $2.69 stock with a 50 and a 200-day moving averages at respectively 220 and 151, which means the stock is now trading well above both of them, indicating positive momentum. This is where I normally go over the share structure as well as some of the financials and whatnot, but a lot of it will change here shortly, both because of this new proposed acquisition as well as because production is expected to start soon. So looking back at those numbers might not be entirely representative. So instead of me ranting out numbers, I'll try to extract some color on them from Alex later on in the conversation. But that doesn't mean you shouldn't care about the numbers. For people listening, you should definitely care about them. Please visit setterplus.ca and look for the up-to-date numbers yourself. Now, for this to actually become a conversation, I'm going to have to shut up already. And Alex, I'll give you the word here. But first of all, thank you so much for sitting down with me today.
Thanks, Antonio. Good to be back. It's been a long time.
It has been, and the pleasure is all mine. I was just fully expecting you to come on in a Christmas sweater, but I suppose that's how you do Christmas.
Well, this is not bad. I mean, look, it's my Christmas shirt from Tommy Bahamas.
It has been too long, really, since we've sat down for an update. So I hope you have some time here, but I'm not really planning on wasting any more of it. And I'll kick off with the elephant in the room here. This new proposed deal. I just wrote down point number one: why? So why do it? Why now? Why copper? Why Peru? Just why?
Oh, well, there's lots of answers to that question. As we've articulated, I think in a lot of our conversations on social media, we've always said that we were in the M&A space and looking for opportunities and not wanting to be a one asset company for too long. And the reason for that was because of our experience in Chile with the EIA, which was, nearly killed the company. And it was just a good example of what can happen to a one asset junior company when something goes wrong. So, we've been looking. We've come probably second to about three or so gold opportunities in the last 12 months. Gold opportunities, as you know, are very expensive. A lot of expensive deals being done at the moment. You just saw on the weekend the Equinox deal where they sold their Brazilian assets to a Chinese group for $1 billion. I mean, that's premium price for those assets. So I mean, we've been looking, and then all of a sudden, 6 months ago, I was made aware of the fact that condestable could be on the block. And I just want to give you some Spanish lessons here. It's called condestable.
What do they call it? Condestable? Probably. Yeah,
Condestable.
I'm ashamed
Okay,
of.
so as you know, in the vowels here or Spanish in the Spanish language, it's not A E I O U, it's A E I O U.
That's right.
And from that perspective, if you read that and pronounce those vowels, it'll come out condestable. So anyway, so that's the pronunciation for the project. So I became aware of it 6 months ago, and I had some contact with the people that own at Southern Peaks back 7 years ago when they were looking to potentially list the company. And they came to me back then for advice on capital markets and listing the company in Canada and here in Peru and et cetera, et cetera. So, I gave them, some tips, but nothing happened. And so they didn't run a formal process. I guess, through word of mouth and people that were interested were willing to talk to people about the asset. And, we decided, well, let's have a look. I mean, it's copper with precious metals credits. Let's have a look at least. It's in our backyard. It's in Peru. And it's a well-known mine. It's been going for 60 years and very, very well during those 60 years. So, we took a look, and when we took a look, we thought, wow, this mine presents really well. And I've lived here in Peru for 25 years, so I've seen a lot of underground mines in the country, predominantly in the gold sector, and a lot of them don't show very well, safety wise and just mechanization wise, et cetera, et cetera. They don't show very well, but condestable shows really, really well. And we're going to get you down there one day and get you to take a visit and go underground and have a look. But they've done a great job. We couldn't find any fatal flaws. And the other thing that was really attractive to the project was it came with 10 years of reserves. So at 8,400 tonnes a day, we don't have to do anything apart from keep it going if we want to at that sort of rate. But the other thing that we are very conscious of when we do our M&A analysis is what's the upside potential? What can it be? Notwithstanding the constraints of money. And condestable has a lot of blue sky, a lot of potential to expand. And that's something that we really want to look at. So why copper? Well, it's the only underground copper mine that I know of in Peru. So that's interesting. It's one of only two IOCG producing mines in the country. The other one being Mar Cobre, which is owned by Minsur and the Angelini Group from Chile. So this is a rare animal, but copper obviously goes hand in hand with gold to a certain extent. What we were very concerned about was to make sure that we weren't messaging that we were pivoting to copper, because we're not. I mean, this is an opportunistic scenario. We're taking advantage of an opportunity. There are precious metal credits, as I've mentioned. 80% of production is copper, 20% is precious metals, and yeah, it just made a lot of sense. And so we went for it, and probably we were in the right place at the right time, because I also think that they saw us as a good buyer of the asset, a logical buyer of the asset, not only from the point of view that we're here and it's in our backyard, but also that we had a company that had another asset that was just about to come on stream. And that's why I think it was attractive for them to take equity in our company. They're going to share in the upside at Condestable and also at Fenix Gold going forward. And, they stayed with the project too by offering us vendor debt as well, which we've taken as well, which minimised our dilution in the market to existing shareholders. And we wanted, we wanted to keep that around 20%. And that's what we've done. I think it's finished up around 21% a dilution through this financing that we just completed. So, yeah, everything just sort of lined up, and we think it's a logical thing for us to do, and obviously the market has come to that conclusion as well.
Mm-hmm. Well, Condestable, I'm gonna remember that, and now I know it translates well. It translates closely to constable, apparently, in English, and it refers to, I'm just reading it off my screen, by the way. Don't think I've got the IQ for that, but it's a high-ranking military officer or official in a royal household, often the chief military commander or head of royal guards. There you go.
Yeah, and I don't know how it got that name initially. It's actually two mines, Condestable and Raúl. It used to be called Raúl Condestable, but they shortened it to Condestable over the years. So yeah, I'm not sure why they came up with Condestable name, but anyway, it's there.
Condestable, that's it. That's a Spanish lesson for everybody listening as well. What is well, Alex, you talk about gold assets being expensive right now, and that's kind of that's a function, in my opinion, not a bug. And so you could have been one of those, right? I mean, do you feel like going from a pure play gold developer into copper now could cause for a lower multiple or something like that?
Yeah, I mean, that was obviously, part of the discussion and concern. Look, we look at Condestable as a business. I mean, we're mining people. I'm not a financial guy. I don't worry about indices and, ratios, PE ratios and things like that. I mean, we're doing what we're doing in gold and copper because they're both very robust businesses. Right. So, yeah, I don't know what the wash up will be. Van Eck are one of our shareholders. We had a wall cross meeting with them during the process, and they didn't show any objection to what we're doing in copper. We just have to see how it plays out. But yeah, that wasn't part of the thinking. Oh, will we look less attractive from a GDXJ or GDX scenario? No, that wasn't our thinking at all.
What about M&A, but then on the other side, as in you being the acquiree, if you will, do you think that this now makes Rio2 kind of unsellable? As in, you could have been a takeover target before this, but now it's becoming more complex, if that's the right word.
Well, I've always said that I think that we don't exist in 3 to 5 years' time, right? And that's predominantly because of what we're doing in Chile with Phoenix Gold. Right? When Phoenix Gold gets up to what we think it's going to expand to, which is 300,000 ounces at 80,000 tonnes a day per annum for more than 10 years, then I think we become attractive to potentially somebody else. Before then, we don't have the for sale sign up. We're very focused on achieving what we're saying we're going to do at Phoenix Gold. And now Condestable comes along, and there's growth potential at Condestable. I obviously, Condestable at some point could be spun out into another entity if we thought that was worth doing. There's lots of options with regards to Condestable going forward, but and as I've said to people in discussing this financing that we've just did. We're going to continue in the M&A space. I mean, we're looking at opportunities. We think that probably 3 producing mines is optimal for a company like us, a junior company like us. We've got virtually 2. I mean, Fenix is going to come on stream in January. We'd like a 3rd in the portfolio, and we're looking. We're still kicking tires on a number of opportunities. Not sure whether it'll be a development or a producing asset, but I think we're going to round off the look of the company in gold, more in gold. I mean, the M&A we're going to do in the future is not going to be in copper. I can guarantee that. We're going to be looking at things in the gold space, and yeah, it's all about building value. Here we are. We were a 10-cent stock not so long ago, and now we're a $2.70 stock. That's what we're all about. It's creating value. We're shareholders as well as everybody else is, and we're about creating a very interesting company that will get appreciated in the market and potentially appreciated by somebody else bigger than us. That when the time's right, might be knocking on the door at the right time for them.
When I was prepping for the interview and I was taking notes as to your 52 weeks high and low and stuff like that, I said I had a 52-week low of 58 cents, and I had to go back and double check. And I'm like, wait, how did that happen? It's like, yeah, it's hard to even think about that now, I think. And that's 52 weeks. That's not really a goal that long ago.
Yeah, I mean, obviously in the developer space, and particularly in gold, all graphs have gone like that, right? As I like to say, you could be blind Freddy and you could achieve it, I mean, in this market. But yeah, I mean, it's all about execution and delivery. As you know, we've constantly put out visual updates and videos and photos of what we're doing in Chile. We like to do that. It's a very simple process, better than just going out once a quarter with an update. And I think people appreciate that. They like to see what's going on. They like to see where money's being spent. And we'll continue to do that now, both at Phoenix Gold and also at Condestable. So, yeah, we just want to be out there, and we just want to be creating value. And as our pre-video discussion, one day it's not going to be as nice as what it is today from a market perspective. And so we've all got to set ourselves up for that situation if and when it comes around. I'm not saying it's going to happen, but you just got to set yourself up to become relatively bulletproof when that happens.
Well, it was just recently that I went to a conference asking everybody that question, and I can tell you that was nobody's favorite question. Most of them didn't really appreciate being asked about what do you do during a bear market, because everybody's thinking about the bull market, but these things are cyclical. So that's it's a good point that you're making there. I do want to talk about valuation though, Alex. Here, $241 million. How did you come up with that? How did that come to be?
Well, we did it when we came up with that number. Copper was $4.40. So I just want to say that. Because this was not a formal process, what we did was we quickly had a desktop look at the asset, and what we didn't want to do was waste their time and them to waste our time. And so we put a number on the table, and that was based on $4.40 copper at the time. And the technical report that's now filed on our website, which is a technical report that was done by SLR back in 2022. So we based it all on that, and the 10-year reserve life didn't give any value to the blue sky potential. They were okay about that because it is blue sky, and we came up with that $241 million, and they said, "Yep, looks fine." But we also said to them right at the beginning, we said, "Look, because of where we're at, doing what we're doing in Chile, we don't want to blow our brains out on equity dilution. So would you like to take some shares? And also we're going to look for some debt and to help fund this transaction." And they said, "Well, if you can look for debt, we'd be happy to provide you with some debt." And just to give you some background, Southern Peaks Mining is owned by a group called GNRI, and GNRI are a spin-off from Barclays Bank in London, and two of the principals are based in London. One is based here in Peru, and so they have the ability to lend money, and so that they've given us some vendor debt. They've taken some equity, and so that was attractive to them, but also attractive to us because it could keep our dilution down, and then we went into detailed due diligence. The interesting thing was, we were trying to get exclusivity with them for, from the time that we sort of said, okay, we're going to lock in and do our detailed due diligence. They didn't want to do that, so we were flying sort of blind there for a while without exclusivity until probably November that we got exclusivity. But that's part of the game. You play on these M&A transactions. Some people like to give you exclusivity, some people don't. So yeah, we just did a hell of a lot of work. We did 3 months of technical due diligence with independent experts, financial due diligence, et cetera, and we just couldn't find a red flag, right? And that speaks volumes for the work that Southern Peaks did. The other thing we're doing, which is going to be virtually seamless, is we're taking the entire management team here in Peru over underneath our Rio2 corporate structure. So, and as people know, we're a little bit different to other Canadian juniors. We're not based in Canada, we're based in Peru. So we have an office here where I'm calling you from, 15 people, and we're overseeing what's happening in Chile. And we've built a team of people in Chile. It's going to end up being, once we're in operations, about 500 people in our operations in Chile. And here in Condestable, we've got, I think it's around 1,000 people that are coming across. So they're just going to bolt on underneath our corporate structure. Really good people doing a great job. Our messaging has been business as usual. Okay, ownership has changed, but business as usual, nothing changes. You don't lose your jobs. You're going to keep going. And I think that was another thing that was attractive to Southern Peaks as well, was we were willing to do that. I know, for example, there was a Chinese group looking at it, and, the Chinese would have come in and just changed everything, and I don't think it would have been for the better. And other potential mining companies could have done the same thing. The other thing I've got to say, sorry, I'm sort of picking on all the questions that I was asked along the way. One thing about this asset, it was the perfect size for us. And when I say that, it's about 27,000 tons of copper equivalent a year. It's not a huge mine, right? It's very profitable, but it's not huge. So it wouldn't have been of interest to Southern Peru Copper, for example, or to Hudbay or to Capstone or somebody of that size from a copper perspective. This wouldn't have been attractive to them. So that worked in our favour too, because we didn't have those sorts of guys sort of buzzing around the asset. Mm-hmm. So it's all worked out well, and as I say, business as usual. And we don't get the keys until later in January. There's a tax certification that we've got to get from the Peruvian tax authorities. That's stock standard process, takes 30 business days, but because we got Christmas and everything in between, it won't appear until probably around the 20th of January, and that's when we close this transaction. Today, which is the 15th of December, we just announced the closing of the financing. So money has gone into escrow. I think it was 191 million Canadian has gone into escrow, and that's worked out well. And we've also done a sidecar private placement here in Peru to Peruvian and Chilean investors through our market broker here, Calpa Securities. They raised $10 million US, and that's about to close as well. So that'll be on top of the 191 Canadian that we just closed on.
Mm-hmm. I do, and you didn't have to run this through a shareholder vote. So I do want to ask you something about that.
That was important to us. And that was one part of the concept of dilution. If we had gone for a big equity financing, we would have seen that we would have crept over the 25% scenario for calling a shareholder vote, and we didn't want to do that. Mm-hmm. So that was one of the reasons we structured the deal as we did.
Okay. Well, I would have guessed you would have to do it though, because it changes the risk profile, I suppose. It changes the entire company, right? So how come? Like, how are you even able to do it, without calling a shareholder vote?
Well, there's a threshold. If you bring in more than 25% new equity into a company, you've got to call a shareholder vote. If you don't, if you're under 25%, you don't have to call a shareholder vote. That's just the rules on the TSX. So so that's how you get away with it. And a lot of people try and do that because a shareholder vote entails 3 months of process, et cetera, and you just don't want to go through that. And typically, I mean, given what we've seen in this asset and given how successful this financing has been, it would have been a rubber stamp, but it would have taken 3 months. Mm-hmm. And that typically scares away the vendor, right? Because the vendor's then exposed for another 3 months, right? So, no, it all worked perfectly. I mean, shareholders obviously will get to know the asset during this year. We'll have an AGM coming up. Oh, sorry, this year, I mean 2026. And we'll have an AGM in the early part of 26, and obviously we'll talk about it and they'll have their chance to talk to us about it. But we haven't had any pushback. I haven't had any pushback from anybody really on this transaction. And the good thing about this transaction is it allowed us to bring in new institutional shareholders to our company, which is very important for the life cycle of a junior company that's going to morph into a medium-sized company. Is the shareholder structure, and the book opened, as you know, we were chasing, I think before the upsize, we were chasing about 160 million Canadian. The book opened at 560 million Canadian, 560 million. I mean, that was the appetite for this deal. And the same thing happened in Peru. They had a limit of 10 million US, and within 2 days they had 20 million US in Peru and Chile. So, this transaction was understood. I think people, could see what we're trying to do. I think we messaged it properly, and I think that's a big part of any transaction is being able to message what you're doing. Mm-hmm. And yeah, we'll go into 226 looking at a different company.
Why is Southern Peak letting it go then in that case? I mean, you like it, you like the price a lot, and the price doesn't seem too high either. And they were actually planning on expanding the mine last year. I saw news about that. So what's changed? What's the catch? Why let it go at this price and this risk profile as well?
Well, like I said before, Southern Peaks is owned by a private equity group out of London. Now, private equity typically hold assets for anywhere between 5 and 10 years. Over 10 years is really a long time. So Southern Peaks have been here for 12 years. Did a great job. Yeah, they could have kept going, but they wanted to monetize the asset. And like I said, I think we were in the right place at the right time, doing the right thing for a change, because that's not always the case in this mining sector. So we were just lucky that we hit them at the right time, with the right offer, with the right structure, and the rest is history.
Mm-hmm. Talking about closing, is there a chance, or are there any risks really around the Peruvian tax certificate, or another condition that could delay or
No,
derail the deal?
no. It's nothing like that. It's not an approval certification. It's actually just a document you get from the tax department on a transaction like this that fixes the asset value, right? And it's the book value of the asset, and yeah, it's
Right.
nothing. It's just a
Hmm.
procedural thing.
Okay.
It's but it comes in anywhere between 0 and 30 days, and as we know, and this is a good thing, is we know how our system works down here. It always happens on the 30th day that you get the certificate. Right? You never get it before.
Yeah. That's how it goes with me and my wife as well. When she says, "Can you put the dishes in the dishwasher?" I'm like, "I'll do it this week," which means, Sunday evening. What is essentially what I'm going to, or what I'm asking here, Alex, is this mine going to make you money next year? Like under normal conditions, you're expecting this mine to make you money next
Yeah,
year, right?
yeah. I mean, at 8,400 tons a day, and as I said, we've got 10 years of mine life. I mean, that's a big attraction for this asset. There's typically, when you buy assets, they've either got they're either in distress, they're either got a major problem, either environmentally, socially, somebody's got to fix something. This one doesn't. It's just, you can keep it going at 8,400 tons. Um, the EBITDA, uh, uh, the numbers that we've shown, and there's a presentation on our website, which covers this transaction. The EBITDA this project will throw off next year at spot is probably around 150 million US. You take off the tax, it's about 29% here in Peru. So, plus $100 million of free cash flow coming out of Condestable next year. And we don't have to, and that's why we wanted to keep it as business as usual. We don't want to change anything. We just want to keep that going nice and steady going forward as we look at potential to change the look of the asset. But, that's going to take time. But yeah, it's going to spin off a lot of cash. Phoenix Gold, just to correct you on what you said earlier on, Phoenix Gold actually gets to 100,000 ounces per annum next year, or in 2027.
Okay.
2026 is a ramp up year from 0 to 20,000 tons a day. We'll probably do about 60 to 70,000 ounces next year. What are our costs going to be? We don't know. I mean, obviously, the feasibility study that we did back in 2023 estimated 1,250 at a 100,000 ounce per annum run rate, and a life of mine, AISC it was. So, what's gone up in Chile in that meantime? Probably labour costs are the biggest factor. They've gone up. Fuel's not. That's a good thing. So. Next year will be interesting to see how we bed things down and ramp up at Phoenix Gold. So yeah, it's unknown at this stage, but about 60 or 70,000 ounces, and first gold definitely in January. That's a given. We're seeing lots of stuff going on in the plant now, and the commissioning of various components of the plant, and it's all working well.
That $145 million that you're talking about in EBIT, at Condestable, that's at spot metal prices, I think. Does that
That's a
mean
spot.
does that mean you won't need to finance again, ever?
Well, yeah, Matt, but that's a big point that I missed out. Why did we do this transaction? Is because it generates cash day one. And what are we going to need for the expansion of Phoenix Gold? Cash, right? We're going to be looking at the expansion of the project, but also the construction of a pipeline from a water provider in Copiapó to the project. So, there's there's several hundreds of millions of dollars of capex required for the water pipeline and also the project capex, and we were talking about the fact that Phoenix startup would pay for some of that. Now we've got another contributor to that, another asset that contributes to that cash. So yeah, let's see. But let me tell you, there's no lack of interest in various groups wanting to finance the expansion of Phoenix Gold. I've been pushing off lots of people because it's too early to talk about that, but there's a lot of interest in getting involved in the financing of that project.
And you're so actually going back to why condestable and why now, part of the reasoning here is because you think you can grow it to 12,000 TPD from its current, again, 8,400. So that's a near 50% targeted growth here. What exactly do you have to do to get to that number? What are the capital costs going to be for that?
Well, the process has already started. They have filed a modification to the EIA to go to 10,000 tonnes a day. And that, from what we've seen and what we've evaluated, should be approved by sometime in August at the latest next year. And here in Peru, when you get your approval at a throughput rate, let's call it 10,000 tonnes a day, you've got the ability through a short form sort of permitting process with the Ministry of Mines, you can go 20% above that. So that takes it to 12,000 tonnes a day. Right. So you never build the 10, your approval is for 10,000, but you never build that. You build the 12,000 tonne a day project. So timing for that, we need to do the work. I mean, obviously the approval process is in process, but the actual mechanics, what's the capex involved in getting to there? We've sort of got a feel for the capex. It's going to be predominantly plant-related capex, not underground development capex. So, I think it's going to be less than $50 million, but we don't know yet. We need to do the work, and we don't know the timing exactly yet because of not knowing the capex. So we need to do some work. One of the first things we're going to do at Condestable is we're going to do another 43-101 with SLR, who did the last 43-101, hopefully by the end of Q1 of next year. And what that will help us do is sort of project and see how resource reserve replacement has been has happened over the last 3 years, because the last one was 22. We'll see how the mine's performed, and we'll project out, what we see. And then the other thing we got to do is we got to look at drilling and what sort of work we need to do to continue, because they've been on a good trajectory from the point of view of expanding reserves at the project over the last nearly 10 years. So we want to continue that. And so Condestable has got a lot of, it's been going for 60 years, I think, and we've got a 10-year mine life going forward. I think the project's going to go for plus 20 years going forward. And the other interesting part of the blue sky is the potential for an open pit, not enveloping the underground operations that exist at the moment, but to one side, to one flank of the underground, there's some near surface drill holes that have looked really interesting, that were done years ago, that don't have the right QA/QC, so they have to be redone to make it into a technical report. But it all stands out that there could be open pit potential, which means there could be an expansion to 12,000 tonnes a day, and there could be an expansion over and above that in the future. But we need to do the work to show that. So what we've bought here is not a static asset. We've bought an asset that has a lot of potential to develop and morph and create value for the company, which is what our job is.
For that research, though, Alex, do you think grade could prove a challenge, because it's really only a 0.6% underground mine, which sounds
it's about copper equivalent is about 0.75.
Okay.
Slong hole stoping, it works. They've got, it's not skinny veins of that wide. It all works, and the interesting thing about the next 10 years of reserves is predominantly above the bottom of the mine. there's some low-hanging fruit that's been left behind because of metal prices and other things over the years that that we want to follow up on. And yeah, I mean, the mine's down to 850 meters below the surface. It's ramp access. Could it go deeper? Potentially, but a lot of the reserves are up above where the bottom of the mine is at the moment. So that's a positive as well. So our sustaining capital, if we keep it going at 8,400 tonnes a day for the next 10 years, sustaining capex per annum is less than $10 million per annum. I mean, that's pretty damn good because you're not putting in a lot of development meters to open up zones of mineralization for feeding the plant. So yeah, it's a really interesting asset. I think it's going to, we're going to put a big spotlight on it going forward in the next couple of years.
How many communities are influenced by the operations?
Well, that's the other thing about the asset, is that it's located 90 kilometres south of Lima on the coast. So when you come down, you'll drive down the Panamericana Sur and you're there in an hour and a half. It's 10 kilometres from the coast. You can see the coast. We're up a few hundred meters, but you can see the coast from the mine. It's the closest operating mine to Lima in Peru. I mean, there's no other mine closer than Condestable to the capital city. So it's got all the flashing lights on it from that perspective. And sorry, I've missed your question. What was your question? Senior moment.
I was asking about the communities, but really why I was asking about where I was going is.
So there's a beach. There's beach houses at the beach. That you see. There's about I think there's 11,000 inhabitants around. Beach culture, but these are not. This is not in the Andes, right? The social climate. I guess here in Lima, as opposed to somewhere near Cusco or Huaraz or Cajamarca is completely different to what's happening down here in Lima. So socially, they've done a great job. There's never been any major issues from a social perspective at this project over its 60 years life from the research we've been able to do. So, yeah, beautiful location for the project.
Would you have to get any type of new agreement with the communities as well to go to a 12K TPD?
No, I mean, obviously we'd have to message it, what we're doing. That's all part of the environmental modification or environmental impact assessment modification that's going on at the moment. So, yeah, I mean, this mine's been there 60 years and people have been around it for that length of time and Lima has expanded and beach culture has expanded down, to that sort of distance away from the capital city. So no, we don't envisage it, but obviously we understand social in Peru. We had two operating mines here before in La Arena and Shahuindo. And so we're well aware of what you need to do to continue to keep your social license in good standing.
Mm-hmm. What about water? What's the water situation?
No problems with water. The interesting thing is there's water wells in the area, so there's no lack of water for the operations. The good thing is underground at 850 meters, there's no water underground. So there's no, like a lot of underground mines deal with water inflows and have to do a lot of pumping, etc. One good thing about Condestable is that it doesn't have those water issues underground. And secondly, the ground conditions are really, really good. And so that's something else that attracted us to the asset was the fact that ground support is not a big, contribution to costs in that particular mine.
You do note that the mine runs 100% on renewable electricity. Sitting here in Belgium, it's not famous for its reliability in a lot of places around the world, but definitely here. Maybe it's different in Peru. How does that work?
Well, I think renewable, when you talk about renewable energy, most of the energy on the grid is hydro here in Peru. Okay. And so that's what you call renewable. And there's an abundance of hydro electric schemes in the country that are feeding energy into the grid. So yeah, they've done that. They've got Copper Mark certification as well. They also have been electrifying the fleet, the underground fleet, which we will continue to do. So yeah, from an ESG perspective, they've done a good job and continue and will continue to do that going forward.
Yeah. Who buys the final product? Where does the final product go? Like, you make it at the mine, and then it goes on to the port. Where does it go from there on?
There's an off-taking agreement in place with Trafigura on the concentrates, and that's just been renewed. That was part of our terms of our transaction. Southern Peaks wanted to renew it with Trafigura, and that's been renewed. The precious metals have a stream with Franco Nevada,
Yep.
And that stream has been a 100% stream up until the end of this year. Then it goes down to about 66% for 63%, sorry, for the next 5 years, and then goes down to 37% thereon, ongoing.
Mm-hmm.
So that's in place. Franco were made aware that we were the potential buyers for this asset. They didn't have a problem with that. Yeah, I mean that's where a problem could have occurred if there was a Chinese buyer or something like that, because obviously they want it to stay with somebody that they can sort of work with.
Yeah, that's very, very politically correct said there at the end. But you're right. But it's 63% the stream, the Franco stream. It's 63% of 20% of the mine revenue in total, because you said 20% is give or take.
Yes.
Precious metals.
Yes.
So that's okay.
Yes.
So 12% of the revenue, essentially, more or less, 63. Yeah.
Yeah. There's a financial model there's a financial model. Well, it's net of byproduct credits, but yeah, it comes off, and there's an EBITDA chart in the presentation as well, which shows the stream impact and then how it then falls away from there. But EBITDA at consensus, and consensus was $4.40 copper, 3,100 gold, and $35 silver.
Yeah.
The net EBITDA was, after everything, was $100 million.
Mm-hmm.
At those consensus prices. So, yeah, this is a very robust project, Condestable.
Yeah. How do you see the Peruvian jurisdiction risk relative to Chile, where you were concentrated before this?
We love it. We live here. We live here 25 years. So, no, look, I mean, Peru's been through, I think, 7 presidents in the last 10 years, and most of whom are in jail right now, which is good, because Peru doesn't let people get away. Well, doesn't let presidents get away with corruption as easily as some other countries do. But yeah, it's been business as usual here in Peru during all that political uncertainty. There's new elections coming up next year in Peru. There's just been a new election in Chile, as you know, and the candidate from the right won, and so he, it's going to be business as usual in Chile as well. So yeah, no, we love Peru. I mean, we'd love to do more in Peru if we could, but yeah, it's a great place to do business. We know how to do business here. We know how the system works here, and we choose to live here. So. Yeah.
Well, tell me more about the Chile side of things then, in that case as well, because you're right. I mean, they do have a new president. What does that mean for business? What does it mean for mining?
Well, I think what you saw during the Boris government was a move to the centre after year 2, so halfway through his presidency, because all the things he wanted to do in the first 2 years didn't work and didn't get approved. So Chile's been business as usual for the last couple of years, and since we got our EIA approved, as you know, back in late 2023. So, yeah, I mean, I think it's just business as usual. I think he'll be a positive to the mining sector. Hopefully, and there's been attempts to streamline permitting processes and EIA processes and things like that. So hopefully that continues, and actually gets enacted, because I think Chile is a little bit more complicated than Peru is, to a certain extent. But yeah, I mean, business as usual, and obviously with our track record, we know how to do business in Chile, and we've done that successfully to get to this point.
What do you think about the broader setting in Latin America as a whole? And I understand it's different places, but it seems like a lot of places are moving toward the right more and more.
Yeah, I think so. And you saw that in Ecuador. Um, you know, Peru obviously has been sort of left center. Chile was left center and now is right. Argentina's right. Colombia is going to have new elections next year as well. So, there's probably a move to the right there. So yeah, it's getting better. And I think, well, if you're going to stack up Latin America against Africa, I think I'd rather be doing business here than I would in Africa at this stage.
Hmm. What do you think is the biggest risk around this new deal or this new asset? I mean, it's not jurisdiction. It's not a bunch of, I tried throwing whatever I know at you: power, water, community, everything else. What do you think is the biggest risk?
Um, uh, I guess metal prices, we don't know what's going to happen to the copper price going forward. Obviously, we're in a copper bull market at the moment, and there's all sorts of talk about supply, demand, etc. And I'm not going to get into that. You won't see a page in our presentation about why you should invest in copper. I think that's
Thank you.
yeah, or gold or anything like that. I mean, yeah. Anyway, I think to me, what the biggest risk is, and I've worked underground. I started my mining career underground in Kalgoorlie back in the early '80s. So before the big pit was there, and for me, it's safety. Even though things have been, the track record at Condestable has been good, I'd want to make sure that we focus on safety, because underground is a different world to working in open pits. And so they're not doing anything risky. Not saying that there's anything risky going on there. I just want to make sure that we keep a very keen eye on underground safety, because it's a big important part of business. And everybody who goes to work, you want them to go home at the end of the day. So that's very important. But other than that, risks, I don't see a lot. Don't see a lot. But we'll see, and we'll address them as they come up, I guess. But that's our job.
Could allocating time and financial resources to the new asset slow down expansion at Phoenix? Is that a risk?
No, no. Phoenix has got its own life to run, and is independent of Condestable. What Condestable does do is Condestable has the potential to bolster our balance sheet when it comes time to financing the expansion at Fenix Gold.
Yeah.
So no, it's not going to take our focus away from Fenix Gold, and as everybody knows, and there's a page in this presentation which has got a timeline. We're very focused on sticking to that timeline, and as people know, Phoenix Gold can't. I mean, a lot of people have asked us, okay, we've done Condestable, can you speed up Phoenix Gold expansion? You can't, because it's a set process. You've got to do the studies, you've got to do the EIA, you've got to build the pipe. So 2030 really is really the best timing we can see for Phoenix Gold. The interesting thing is, what do we do at Condestable? Given that there is the expansion potential to 12,000 tonnes a day, given that there's this open pit potential that we'll have to unveil over the next couple of years. What do we do with all that? And so that's going to be interesting to see how our decision making goes during that process.
How is everything going? I know you touched upon some of the stuff, but how's everything going at Phoenix relative to expectations, both from a financial and a complexity perspective?
Great. I mean, on time, on budget. As we always said, very simple project. Run of mine, heap leaching. The plant is pipes, tanks, pumps. It's nothing complex. And yeah, all I can say is that the team in Chile, we've just done a great job.
Hmm.
We've got a great team of people there. At the peak, we had about 1,600 people working on the operations or in the construction. That'll obviously come down as we go into production. And as I said, about 550, I think, is what we're targeting for personnel in operations.
Hmm.
But really, really good job. And and I think because we built our project after Solaris Norte was built, so there were people coming off that construction who we've been able to bring over to our build, and yeah, you know, we've got a first-rate build and operate team in Rio2. I mean, I think there are a couple of companies in the market, B2 Gold, over the many years that they've been, excuse me, in existence, have had a real good build and operate team. I think G Mining have that as well, and we're probably in that top three. I think, and particularly in LATAM, I think we've got the top build operate team in LATAM
Hmm.
by miles. I've got to say that. But yeah, we've got a great team, and they've done a great job.
Water and the way you get water is something that we've been talking or that we talked about last time. So you truck the water there. How's that been for you so far during construction? Have you been
Good.
able to truck water reliably?
Well, it was good to show some videos of water in the pond, right, in the PLS pond. No, we're ramping up. Obviously, we don't need, when we're at 20,000 tons a day, we need about 2,100 cubic meters of water a day, right? That's when we got the full truckloads going up. Now it's sort of ramping up to that level. It's a logistical exercise. It's going well. Finding people to drive the trucks is an issue. There are contractors that we're using for for the for the trucking of the water up there, but they have to find people to drive those trucks. It's an interesting dilemma in the Atacama region, even, the Copiapó region, is just finding people that have the adequate skills. I mean, you just can't pick a person off the road and say, drive the truck up the, drive a 30-ton water truck up the road. So there's things about that, but we're ramping up and we're getting a good rhythm going on trucking the water up, but it's not a problem at this stage.
Has community relations been there for you so far? Are they asking any more questions around maybe the source of that water or something else? Or
No, no. I mean, because it's industrial water, it's not a problem. And we see that probably with the desal pipe being put in place in the next few years, that we can demonstrate that they can receive some benefit from that water that's going up the road. So, yeah, I mean, it's no issues, no issues at this stage. We're going to have to do an EIA on the water pipe and the expansion of the project. So we'll see, but there will be community consultation and considerations taken into effect.
the chinchillas are not asking any more questions either, then I assume.
Chinchillas, yeah, yeah, it's good. I mean, I love the memes on Twitter. I hope they keep coming. Um, yeah, look, chinchillas, we're dealing with that. There's no issue. I mean, obviously, that was part of our undertaking of getting the EIA approved. Is we would monitor and we would do the right thing by the chinchillas if we found any. Um, Chinchillas are prevalent throughout Chile and the Andes in that area. So It's not something that we're the only ones dealing with. There are other operations. I think Kinross are dealing with chinchillas. I think obviously Solaris Norte are dealing with chinchillas, and that's going to be something, I guess. It's interesting. Chinchillas are abundant, but they're in a protected species category in Chile, and there's a lobby going on to drop that because they're not an endangered species. They're very abundant in the Atacama region. So yeah, let's see what happens with that. But no, we're not having any issues with chinchillas at this time.
You should get a tattoo of a chinchilla if they ever demote them to non-protected.
Yeah, on my forehead.
Yeah, just as a reminder. Do you expect having to restructure the board as well now that you're becoming again a more what do I call it, a more complex company, if you will?
I think board renewal is something that every company has to look at. Look, the board that I have has been very supportive to get us to where we are today. I think without a supportive board, we wouldn't have been able to achieve where we sit today. I think at 1.1, $1.2 billion in market value in Canadian dollars, doing what we're doing in Chile, doing what we're doing in Peru. So I got to take my hat off to the board and their support. But yeah, there'll be typical renewal and review of the board as time goes on.
Mm-hmm.
Maybe even me. Who knows?
Is that something you would want or see happening? I guess because it's kind of like your face is just as much part of the branding as Fenix and as chinchillas
well,
themselves.
I'm the marketing guy. I'm the business development guy, so that's why you see me a lot. But Andrew Cox is doing a great job as president and CEO. I mean, he's got the team humming in Chile, and he'll do the same here in Peru with Condestable. Yeah, I mean, I enjoy doing this, but yeah, I'll see this to the end. But as I say, I don't think I think in 3 to 5 years maybe we don't exist, and that's the time I say goodbye. But no, we got a job to do, and I'm enjoying what I'm doing. So, and I think everybody else in this office is as well. And that's the key to any work that you do. Anybody anywhere in the world needs to enjoy what they do and look forward to coming to work every day. And that's what I do. And I enjoy watching the team, giving them the resources to do what they're doing and them delivering on what they say they can do. So good.
And you can do that in short sleeves, which is pretty cool as well.
Can do that in short sleeves. We'll do a few more conferences. We might see you. I mean, I haven't met you in real life, so
that's right.
You haven't seen me in 3D, so you only see me in 2D. But yeah, we'll go to a few conferences next year, and because Andrew certainly and myself will go and we'll go and see a few people, meet a few people.
Maybe a bit off topic here, and I actually found it to be off topic in the first place, but you've bought 15% of Royal Road Minerals. What's up with that?
Yeah, I mean, that was another opportunistic scenario. I knew the banker that was in charge of disposing of Agnico's block of shares in Royal Road. And the other interesting thing with Royal Road was that their largest institutional shareholder was our largest institutional shareholder. So there was some really good connections there, and I knew Tim Coughlin. I met Tim when I was here back 25 years ago. For the first time in the country, Tim was a geologist, and he was working for Anglo Shanti back then, and and he's a very reputable geologist, knows what he's doing. He's been a first mover in Colombia back in the day, and he's been an early mover in Saudi Arabia, and he's also in Morocco. And we just looked at it. We had some spare cash lying around, and we thought, well, to become a 15% shareholder of a company that does something that we don't do. We will never be a Royal Road. doing grassroots exploration anywhere in the world. I mean, we're brownfields guys. We're all about building projects and operating them. So we thought it was a good mix. A bit unusual for a company our size to do that because usually it's the big guys that do it. But to take 15% of the company for just under 5 million Canadian I thought was a great deal. And we're a silent partner, obviously providing advice as required. And we like Colombia. As I said, Colombia is going to have a new president shortly, and hopefully somebody that's a little more pro-mining than the existing president. Colombia is not far away from where we are here in Peru. So we like the assets, and Tim's got the largest land position of any, Royal Road has the largest land position of any mining company in the country. I mean, he acquired Anglo Ashanti's land package in the country, and it's very prospective. So we like that, but we don't have to do the work. We just have to let Tim do the work, and we'll support him financially as required. Saudi Arabia is intriguing. Don't know what the potential there is, but he's got some interesting stuff that he's following up on. And Morocco is just the same. So we don't have to go there. We don't have to spend money directly there. All we have to do is support Tim, and we think it's a great idea. So let's hope that he can unveil the goods.
I think after all of this is said and done, you're going to be left with quite the treasury anyways. Is doing stuff like what you've done with Royal Road going to happen again? Do you see yourself being opportunistic on equity?
No, not really. I don't think. I mean, we want to own things 100%, I think. So yeah, we've got a good balance sheet now. We've got quite a bit of cash on there. We just had a tax refund in Chile, $14 million US, which was, you get your GST back on construction in Chile. So we just got a nice check, and we due another one probably halfway through next year for another $14 million. So we've got plenty of money. We never did this financing for Fenix because we were fully funded at Fenix. We as you know, we had up until a week or so ago about $50 million in the bank related to Fenix Gold. So now we've got a shot in the arm with what we've done at Condestable. I mean, we're good for a balance sheet, and that's, I think that for a junior company, a junior company morphing to become more than just a junior explorer or a junior developer, is that we've got a strengthening balance sheet, and we'll have an even stronger balance sheet towards the end of next year. So all that is great, and let's see what we do. But as I said, we're active in the M&A space. We will do more M&A going forward in the gold space. I'm sure of that. But we'll see how that plays out.
Well, Alex, you'd promised me an hour. I've taken almost an hour and 10 now at this point. What am I forgetting to ask you, though? What do you think? What did you come here hoping to talk about that I failed to bring up?
No, I think, I hope this helps people understand why we did the transaction with Condestable. There's lots of stuff out there now. The presentation is out there. People should go to that and flick through it. It's pretty easy to understand. It goes through the rationale of why we did the deal. We continue to execute at Fenix Gold. First gold will be in January by hook or by crook. That's going to happen. Look, let's see how Rio2 develops over the next year or two with both Fenix Gold, Condestable, and maybe Project X, and let's see what happens.
Project X, I like that. You might have to buy the trademark from someone else, though, but it might work. That's it. What am I? No, I think that's about it. I think it'd be good to have a catch up once you've been operating for maybe a quarter or a little bit longer, and then see how everything else is going. But I'm all out of questions, so just thank you so much for sitting down with me today.
Yeah, and thanks for your time. Antonio. I really appreciate it.
And as always, thanks to everyone for watching Resource Talks. I have a couple of more things to say, though. The fact that this company was interviewed here today does not mean that they're necessarily a good or a bad company. I'm not here to endorse nor attack anyone. I am simply here to ask some questions. If you find that I have failed in asking a question that you would have liked to hear an answer to, which will happen as I'm not an experienced interviewer, please let me know and I will try to correct that mistake in a future interview. As mentioned at the beginning, please understand that mineral exploration and development is an extremely risky business. Losing money is the norm and should be the expectation. This is a very complex sector, and the performance of individual companies typically depends on many different moving particles, including company-specific factors like geology, financing ability, and many others, really, as well as particles that are outside of the company's control, like geopolitics, macroeconomics, commodity prices, and many more, most of which are nearly impossible to fully understand. Moreover, these companies that typically get interviewed on Resource Talks are in the pre-revenue stage, which means they rely on the public markets for the financing of their operations, which could result in shareholder dilution. Furthermore, as a general rule of thumb, you'll be better off understanding that all company communications online, albeit this interview or their website and their presentation and their social media accounts, or even the social media accounts which you thought were your friends and then told you about a stock, everything really that these companies do is intended as marketing. And although I do not make buy or sell recommendations because there is a clear conflict of interest given the nature of my business, many out there do. And you should be aware of that inherent bias and you should be careful out there. That bias is not always going to be clearly disclosed with everyone out there. So it is safer for you anytime you're watching any type of company specific content to approach it with a dose of skepticism and assume that the party telling you about it is biased in at least some shape or form, because there will always be a bias. Again, albeit clear or not. So always ask yourself what the incentive of your counterparty is and never rely on them regardless of their incentives, but instead double check if what they're saying is true, again, by using setterplus.ca. The fact that I have no idea what I'm doing should already be clear to you at this point. I am not saying this to make jokes or laugh with myself. I just simply do not have a long enough track record of consistent investment profits. So I should under no circumstances be considered an authority on anything. Again, although this may sound amusing to you, believe me, it is not amusing and it is not intended as a joke. I'm simply pointing out a fact and warning you not to rely on anything I do or say. Unfortunately, at least to my understanding, nobody out there has any special abilities. The CEOs do not possess any superior knowledge, and they cannot know about what will go up, what will go down, or what will go in circles. Some people even believe that to be rule number one on Wall Street. Nobody really knows. None of us know whether any of the company's activities will result in a success, again, given that we're talking about high-risk activities where most of the times it ends in failure. Also, unfortunately, try as I may, I won't always catch all red flags or all challenges with the companies. So even if I did ask a few tough questions in here, don't rely on this being all of the tough questions. Again, these are complicated startups with many moving parts, and I am conflicted given the nature of this business. Therefore, I cannot guarantee the quality of anything presented in this video, and you cannot hold me responsible for any losses or damages stemming from the way you decide to use this interview. Viewers, listeners, and readers acknowledge and agree that the information presented herein did not constitute a solicitation or an offer to buy or sell any security or investment or to participate in any trading strategy. Resource Talks and all parties involved in the management of the business strictly disclaim any and all liability for losses and or damages, whether direct, indirect, special, or consequential, or other consequences, however so caused, arising out of any use or reproduction of the content published by Resource Talks or any decision made or action taken in reliance upon it. By consuming this content, all consumers vow to release Resource Talks and all parties involved in the management of the business from all claims, proceedings, or consequences. This is all to say, I know it's a lot of lawyer talk, but this is all to say that you shouldn't blindly trust me or anybody on the internet, and you should do your own research. Once again, social media is meant for entertainment. It is setterplus.ca where you do your research. That's where you'll find a company's official filings, and I encourage you to read and analyze the management information circular, the financial statements, the management discussion and analysis, and whenever available, the NI 43-101 technical documents. If you don't understand everything in those documents, the chances of you losing money are even higher than they normally are in this space. And as mentioned earlier, the chances of even the best analysts in this sector losing money are extremely high, since this is venture capital and it is not for everybody. I'll leave you with one of Charlie Munger's quotes, which I wish I had listened to more often earlier on, which says, quote, "If you don't understand it, don't do it."